We're still a few minutes away from the opening bell, the final one of this very tough week after that hawkish Fed meeting. But before we get into that, let's dive into some trending tickers that are moving here this morning. Shares of Adobe in focus following an earnings beat on the bottom line, while revenue came in line with street estimates and increased 10% year over year. This is the top ticker on our website right now, up about 5% in the pre-market. And Brad, some holes to poke in here, and Brent Thill over at Jefferies poking those holes, noting that a key metric, the performance obligations, that growth rate slowed in the quarter. He's also calling out some potential risk to their fiscal 2023 guidance. In his view, does not embed enough economic risk. Thill says a recession could lead to layoffs and fewer Adobe users. That might not be priced into the stock here.
Let's talk about some of the numbers within that guidance. The targets for fiscal year 2023, and they just wrapped fiscal year 2022. The total revenue target for fiscal year 2023 is $19.1 billion, upwards to $19.3 billion. They're also trying to get a digital media net new run rate, basically, of about $1.65 billion there. But all of this considered, you're really looking across three segments here. It's digital media, it's digital experience, and the subscription revenue within that digital experience too is going to be key. And that subscription revenue they're anticipating is going to come in at about $4.375 billion and upwards of $4.425 billion. But anyway, at the end of the day, it's really just going to come down to, again, how many of those customers they can retain and then add on. Because if there's one cost restructuring measure that some companies do take, is they look across the number of licenses that they do have for some of these services. And as a former marketer, I remember using some of the Adobe services and the different acquisitions that they made over time to really integrate more licenses and more components into this overall umbrella of services there, and their suite of services. And so if you do see corporations saying, we don't really need this many licenses for this type of service, then that could be one of those headwinds that they're talking about.
So that they don't just make PDFs?
They don't just make PDFs.
No, of course I do that. Of course. No, and I'm glad you mentioned acquisitions, because this is a company that is still trying to close on this acquisition of Figma. A huge, really one of their largest acquisitions in their history. That process of closing that deal at some point when it does later next year, that process, getting to that point of closing the deal, is also seen as a major risk to the stock here.
And investors didn't like that deal when it was announced. The stock was sent lower immediately on the reaction to them announcing the acquisition of Figma, or the intent to acquire Figma. And it's really just a question of, in this environment, how many investors are going to actually reward some of the capital that's going out the door for this a kind of acquire to growth strategy that a lot of ERP or even cloud-based services have really grown accustomed to over the years. And it's going to be heavily scrutinized. People and investors and shareholders especially are going to say, well, why are you spending this money when you could be hunkering down some of that cash for a rainy day? And it's pouring right now.
So no more PDFs. No, but this is why I like this season for analyst notes. I like Brent's title. No big surprises under this tree. And even Brent's not alone. You're seeing a lot of catchy headlines out there on these analyst notes. It is Santa season and holiday season. I like the creativity.
Is note a PDF?
Yes, it's true.
Also,
it actually is. I just downloaded it.
Yes.